Ticker symbol NKE is down around 23% for the past year and is sitting close to 52-week lows. But today, we'll be looking at a clear market leader with a wide moat and why it was actually ranked in 8 for outperform by TipRanks based on a moderate buy from analyst consensus, bullish blogger sentiment, and increased hedge fund activities. So we'll be looking at Nike, a footwear and apparel company. In their annual report, Nike states that their activities consist of designing, developing, marketing, and selling of athletic footwear, apparel, equipment, accessories, and services. They mainly sell products through Nike-owned retail stores and through Nike-owned digital platforms. However, they also use other channels such as retailers or even independent distributors. These can be companies such as Foot Locker, which sell shoes from various different brands. Additionally, they also state that nearly all products are manufactured by independent contractors, meaning that Nike almost doesn't take care of the manufacturing process, with nearly all footwear and apparel manufacturers outside the US. And I believe they said that they have more than 400 factories located in more than 30 countries, with Vietnam, China, and Cambodia being the biggest countries in terms of production output. One positive thing about Nike, which is pretty reasonable because it's such a huge company, is that there was no customer which accounted for 10% of net revenues during 2023. And this is extremely positive since it illustrates that their revenues are extremely diversified and that if they lose one major customer, it won't hurt them that much. Finally, their main competition criteria which they state in their industry are, first of all, product quality, then the price to value that customers are getting, an efficient product distribution, meaning that your products have to be visible and easy to find, and finally, most importantly, brand trust and loyalty. But this company gets even more interesting when you break it down into numbers and you conduct a financial analysis. Because its return on capital employed is 15%, which is sitting just below the threshold we usually set for return on capital employed in this channel, which is 15%. It has a very solid interest coverage ratio of 19 times, meaning that it won't have any leverage financial trouble in the short term, and they have a cash conversion of 109%, meaning that for every single dollar that they make in net income, they produce $1.09 of free cash flow. And this is extremely positive for the investor, as free cash flow is what we get in the end, as companies reward us in dividend payments and also share buybacks. Finally, they have very solid profit margin of 42% and an operating margin which could be better. However, since it's clothing, apparel, and shoes, I believe that this is very solid. Now, the revenues have been increasing slowly every single quarter. However, due to their last earnings report, they actually stated that Nike's net margin had decreased around 6% year over year, and that net income had decreased by 4.5% again year over year. But when looking at the efficiency ratios, we can see that Nike is rock solid. The one that we like to focus on from this slide is return on invested capital, where we can see that it has traded around 20% for the past 3 years. Extremely solid. And when looking at the efficiency ratios, Nike is again rock solid. We can see that they have a pretty solid current ratio, with their assets being way above their total liabilities, and then their equity is higher than their debt. We can see that in 2020 this wasn't the case and debt was almost 2 times equity. However, they put some effort into fixing this and now their debt to equity is in a very reasonable, safe level. So with conducting a proper fundamental analysis, I'm glad to say that Nike almost gets the perfect score with 7 out of 8 ticks. Starting off with low liability risk, as we have seen with their 19 interest coverage ratio, then they also have a very solid balance sheet. And this was deducted by them being able to actually cover all their short-term liabilities with only their current assets. They have an extremely consistent cash flow, as around every single quarter they have the potential of generating the same amount of cash flows. Now, this company is recognized from being a very safe dividend payer, which is growing their dividend at a pretty fast pace. And they also conduct share buyback programs. This company, of course, has pricing power, as their quality, their brand, and their loyal fan base allows them to price their products at a premium in comparison to other competitors in the same industry. They have organic revenue growth, as we have seen, although this is not at the rate at where it used to be once. I believe in 2023 they grew revenues by close to 10%, which is extremely solid for a company of Nike's size. Finally, the most important one, this company has one of the greatest existing moats in the market. They are the clear market leader in their industry. I believe they have the most loyal fan base and they produce extremely high quality products. They're innovating every single year, coming up with new technologies that help you run better, that help you perform at a higher level. And their marketing is genius, which allows them to create an even stronger brand than the one that they have already established. The only one that I didn't really like is that their free cash flow, although it is consistent, it has not been growing at the same pace as the revenue, meaning that although the revenue has been growing, maybe their costs have been growing at the same pace or even faster. Now, I know a lot of you like your dividends, and Nike is perfect for you because it currently pays a dividend yield of 1.4%, which is higher than the dividend yield it has paid for any single quarter in the past 5 years, as you can see in the chart. Additionally, the amount paid is being raised every single year, and the dividends per share are increasing at an even faster pace. Why? Well, this, of course, is because of their share buyback programs. And now Nike is trading at an extremely attractive valuation when we're looking at it from a PE ratio, since it is trading at the lowest PE multiple it has been trading for the past 4 years. You can see it just above 24 times earnings, where the average of the past 4 years has likely been closer to 30 PE. And then when looking at their 3.55% free cash flow yield, this also suggests that the company is at an attractive valuation, as it is higher than the 3% long-term inflation rate. Now, the only two main risks and possible challenges that I do see for Nike are, first of all, the worsening competitive landscape. And why is this? Well, this is because it's a market which is always going to be competitive. There is so much money in the apparel and footwear industry, especially the sports one. They have to continuously stay at the top by sponsoring the right teams, creating the right advertising, researching and developing the products of the future. For example, the product that we showed you previously in one of the pictures was the self-lacing shoe, and that is a new technology that Nike developed. So by constantly staying ahead of the pack, they will manage to stay relevant. This is not an easy industry to compete in. This is why I give them a 50%. However, I am aware that Nike's brand loyalty is unique and that will help them keep their competitors away. And then the second one is them not meeting performance objectives. This is mainly due to their growth opportunities. They're such a big company and almost everyone around the world already owns or knows about Nike, then they will have to create a solid strategy to keep their revenues and their cash flows growing long term. So before moving on to the investment conclusion, please remember that I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that Nike is a company with a strong competitive advantage, which can provide consistent, predictable, and resilient cash flows, which of course has high return on capital employed, meaning that it can create value for the investor. So I do believe that Nike is a great company, and I am really sure that it will be a great investment. However, I will need them to define and outline a clear growth strategy, because that is what I'm missing from Nike. So thank you so much for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic.